If you invest in these stocks now, chances are you will profit. Boosted by a surprisingly positive jobs report, the coronavirus news appears to be getting less gloomy, although riots and civil unrest continue to cast a worrisome shadow. The promising rebound in the economy and stock market continue to offer hope. That's why if you invest in these stocks now, chances are you will profit. Welcome to Trending's Finest, where we give you the hottest updates on the world's most viral news, videos, and stories in the most exciting format. Click that subscribe button and hit the notification bell to not miss a single beat of the world's pulse. Despite the coronavirus pandemic causing unprecedented financial disruptions and a major shift in the lives of American consumers, a slowdown in new cases has made Wall Street more optimistic about eventually reopening the economy. With that, we've combed through the advice of various experts from Wall Street and compiled a list of 9 magic stocks that will stand the test of these troubled times and come out strong in the post-coronavirus world once widespread quarantine orders are lifted. We also share the best advice in a black swan market like right now. Stay tuned. Microsoft. For Bill McMahon, the Chief Investment Officer for Active Trading Strategies at Charles Schwab Corp., the top-of-mind stock should be the FANG stocks, but more importantly, Microsoft. The FANG stocks, Facebook, Apple, Amazon, Netflix, and Google, are all on an excellent run. But more than these 5, he highlights the tech giant Microsoft. These 6 companies have a combined market capitalization equal to 24% of the entire S&P 500 index. That's quite a concentration of risk. Among the 6, the only one McMahon favors right now is Microsoft. This is because Microsoft has a very strong cloud business, and McMahon, carrying the name of the Charles Schwab Corporation, agrees that their focus on enterprise customers is the right one. He also pointed to the risk of regulatory actions against Facebook, Alphabet, and Amazon.com because of concern over anti-competitive practices, dominance in online advertising, and consumer privacy. Since Microsoft has mostly stayed away from those areas, that's a leg up on the competition. Microsoft, whose shares have jumped almost 9% so far this year, will also emerge stronger after the pandemic thanks to its growing platform of productivity and service offerings. Stifel Financial Corporation expects Microsoft's cloud service Azure to become its largest revenue stream in the coming years. Teladoc Health. According to Nathan Brown, co-manager of the Ivy Midcap Income Opportunities Fund, Americans became a society of homebodies by necessity and may remain one by choice, at least for a while. Along with working from home, people are warming to the idea of being treated for illness at home. Companies such as Teladoc Health, which provides virtual health services to businesses, could thrive as patients and doctors have become more comfortable with the use of medicine through a portal that provides significant efficiencies to both parties. Medical technology and supply companies. Karen Pai, Director of Equity Strategies at Fiduciary Trust International, is another fan of the digital transformation theme, although she herself mentioned that she wouldn't necessarily chase these stocks now after their prices have risen so far so fast. Her firm builds portfolios for investors using funds and individual securities, and better choices today in her view are companies that provide products and services in certain niches related to healthcare and hygiene. For her, medical technology and supply companies should benefit longer term as people who have put off elective surgeries and other treatments decide that the pandemic is eased and the coast is clear. Walmart. A short but sweet recommendation from Stifel and Barclays is the big box retailer Walmart, which is well positioned to capitalize on the growth of e-commerce, particularly the increase in online grocery shopping during coronavirus. The stock is up almost 9% so far in 2020. Home Depot. Another vote for McMahon from Charles Schwab is Home Depot, Inc., because in the midst of this pandemic and varying quarantine measures, the company always seems to be in a sweet spot. When the housing market is strong, it helps the company. When the housing market is weak, people do more renovations, which helps the company. McMahon called the business fairly immune to online competition, The stock is up 24% this year and has a dividend yield of 2.44%. McMahon expects good dynamics for the housing market to continue as city residents look to the suburbs and the affluent look to coastal areas for summer homes. That's just the first half, folks. Keep watching to find out more stocks with the best earning potential and, most importantly, the best advice in the black swan market like right now. Stay tuned. Siemens. Chief Executive of Causeway Capital Management, a firm that offers a range of mutual funds focused on international stocks, Sarah Ketterer, identified some trends that she expects to accelerate. More people may work from home, but the pandemic is also likely to cause lasting change at conventional workplaces. The iffy nature of global manufacturing supply chains grows more apparent, along with the difficulty of securing ingredients for coronavirus tests and treatments and gear for medical workers. That will prompt manufacturers to ensure that crucial supplies are available closer to home, she said. That in turn will raise demand for equipment, tools, and gizmos that help bring about industrial automation. Her firm expects that manufacturers globally will demand the best smart assets on a factory floor, such as robots, sensors, and monitors, and they see that the German conglomerate Siemens has what it takes to dominate automation in the next cycle, because it has superior hardware and the software that makes it go. She adds that no one U.S. competitor has that set of capabilities. ING Group. Aside from the most cutting-edge assets, businesses will prize access to capital after the pandemic, just as during it. Capital is something that tends to be in short supply during tough times, so bank stocks should show strength, especially if the bank's balance sheets are strong. One winner could be the ING Group, a Dutch company whose stock recently was cheaper than it was during the global financial crisis, despite having 3 times the capital it had then. Causeway funds hold both ING and Siemens. Ketterer sees that in the wake of COVID-19, enterprises globally will likely ensure that they have an even greater access to liquidity than they did prior to the pandemic. For companies of all sizes, strong banking relationships become vital once the crisis led to lockdowns and economic disruption. Netflix and Amazon. There will also be a strong demand for accessibility with the heightened desire to spend both time and money at home, notes David Eiswert, lead manager of the T. Rowe Price Global Stock Fund. As you might have noted, many trends that were already in place, the virus is pulled forward by 5 years, including a shift in shopping and entertainment to the home from outside and a greater appreciation for remote, familial, and professional interactions. Although the investment opportunities in these areas have been well flagged, he said, they may have more room to run. Eiswert maintains a digital transformation portfolio within his fund that includes the stocks of such presumed winner-take-most companies as Netflix and Amazon. He acknowledges that their shares are expensive, but says their ability to dominate their commercial niches more than justifies them. Consumers have been relying on online deliveries from shipping giant Amazon, which has seen its shares rise more than 25% this year, more than ever. The prolonged nature of the pandemic is likely to accelerate long-lasting e-commerce adoption, according to Stifel. The company's cloud software offering, Amazon Web Service, will also benefit from increasing work-from-home trends. The best advice for a black swan market. As unpredictable and foreboding as its name, a black swan is an unpredictable event that's beyond what is normally expected of a situation and has potentially severe consequences. Black swan events are characterized by their extreme rarity, severe impact, and the widespread insistence that they were obvious in hindsight. Similar to past black swan events like the crash of the U.S. housing market, hyperinflation in Zimbabwe, and the dot-com bubble of 2001, the COVID-19 pandemic has caused catastrophic damage to an economy by negatively impacting markets and investments and altogether interrupting the way of life in the finance industry and the world. After the longest bull market in history, stocks took a nosedive in March 2020 due to coronavirus fears, what some called a warp speed bear market. Lately, though, they've jerked back up, but the worst may be yet to come. In a recent Allianz Life survey of 1,005 Americans, 54% said they're worried the stock market hasn't bottomed out yet. Nassim Nicholas Taleb, a finance professor, writer, and former Wall Street trader, popularized the term black swan and argued that because black swan events are impossible to predict due to their extreme rarity, yet have catastrophic consequences, it's important for people to always assume a black swan event is a possibility, whatever it may be, and try to plan accordingly. Some believe that diversification may offer some protection when a black swan event does occur. Terry Savage, a nationally syndicated personal finance columnist and author of The Savage Truth, points out that going all the way back to 1926, there's never been a 20-year period where people lost money in a diversified portfolio, even with all the market crashes and even adjusted for inflation. With lower share prices, now could be a good time to pick up some bargains. Gemma Godfrey, executive editor of Times Money Mentor, emphasizes the opportunity that has arisen from the shutdown of bars, restaurants, theaters, and cinemas. People are spending less, which is bad for your social life but good for your wallet, she says. Any extra cash could be an opportunity to invest in assets while share prices are low. Some investors have already taken advantage of cheap shares. AJ Bell reports that its investment platform was running at double its normal volumes leading into the summer. The 21st century has been an age of black swans. From 9/11 to the election of President Trump to Brexit, low probability, high-impact events have reshaped the world order. That age isn't over, and of the black swans still to arrive, the coronavirus is unlikely to be the last to materialize out of China. What's your advice during black swan markets like this? Tell us in the comments down below so we can compare our investor notes. If you want more sizzling hot insider tips for investments, check out our other video. Warren Buffett urges anyone listening should start before quarantine is over to make money. Here we reveal the hottest deal available in the real estate market today, how Buffett himself is doing this, and how you can follow in his footsteps in just 3 easy steps. Watch it now. Thank you for watching. This is Trending's Finest. Always the trendiest, always the finest.